Good afternoon, all. Steve Parisi here with IBC Global. I hope the day is off to a fantastic start. For today's podcast, we have a guest, someone that I've known most of my life, since I was a little kid, I think. And now he works with us here at the company, which I am thrilled. Ed Rodriguez. Ed, how are you today?
How are you, Steve? I'm doing great. How are you?
Fantastic over here. A mile a minute, but we like it that way. It's got to go fast.
Yes, I understand.
Definitely. Well, today I wanted to talk about what you do at the company, but I wanted to start a little bit just with your background because I think listeners and our audience, they're always interested in personal finance, what to do with their money, and your background before you worked here at IBC Global. If you want to share what it is, because you'll do a much better job than I will, feel free. I'll lead with this. You worked on the street, Wall Street, correct?
Correct. I work for the financial district. I worked there for 23 years, 23 plus years. I worked with three different companies because one was getting bought out by the other one. But basically, I worked in the back office. I was the vice president of the operations. I oversee the day-to-day trading processes related to management responsibilities for international trade support. So my specialty was the international trade support. I resolve complex trade flows issues and mitigate trading risk in all fast-paced environments. I reconciled trade positions for the stock traders in the company, see what breaks they had in their accounts, principal, agency inventory. And that's something that had to be done like 6 in the morning because once the market starts opening at 9 o'clock in the morning, they wanted to make sure that everything was up to par to, as far as buying and selling products. And I also monitor the FX exposure and risk management of the trading positions on a daily basis. On top of that, I manage it was from 16 all the way down to four individuals per, depending on the year. It was just a fast-paced environment. We spoke to international clients all over the world. Our focus was the European markets, Asia markets, Australia markets. So any clients that had questions that we did business with, that we would get calls every day. So it was
Yeah.
nonstop throughout the day.
Wow. So some complex stuff, to say the least. Yeah. Did you work more with individuals or was it a lot on the institutional side of things too?
My side was more the institutional side. So basically, we were working with other big, huge companies. So basically, we were working with companies that were put 100 million or more into buying products. So it was
Yeah.
very intense. We were setting up trades of people, just companies buying billions of dollars just in one trade. We wanted to make sure the exposure wasn't overwhelming, that it would mess up the P&L of the
Yeah.
traded stock. It's a lot of complex trades that had to be done. We take U.S. trades, convert them into international trades, vice versa. So there's a lot of different
Wow.
stocks that we had to do different nuances to make sure it's traded the correct way and it is what the client wanted.
Wow. Did you see a lot of times the reasons like why they were making purchases? Like if a company's coming and making a $100 million or $1 billion purchase, was that for just purely assets on the company's balance sheet, or is it more so call it a pension plan for employees and executives? Do they disclose the reasons? Yeah, go ahead.
Well, they don't disclose the reasons, but we knew some of it. A lot of it was pension plans. A lot of
Yeah.
it was just for positions on the client's P&L list. They want to make sure they want to hold those positions because they might feel like, hey, this specific stock is going to do better, and maybe
Yeah.
next quarter or next couple of weeks. So they want to hold on to it. So it's always busy. It was very busy.
Yeah. And you did that for 22 years. What made you stop?
Well, it was, as you know, I moved to Pennsylvania.
Yeah.
I commuted to New York for 10 years. Basically, my day was waking up 4 in the morning, getting to the office 6:30 in the morning, and right away just start working. Coming home, leaving the office 7, 8 o'clock at night, and that's something I also did in New York. When I
Yeah.
lived in New York, I would go home like 12 o'clock at night. So it was just so much going on. And then once as time went by, with the operations area, there was a time where everyone wanted to outsource. So we started outsourcing to India, to Poland, North Carolina. So I was sent to, let's say, London to go over designing systems and seeing how things can be done to be transparent as far as sending jobs overseas. To be honest, and
Yeah.
that's something that a lot of companies have done. And then after that, we started to downsize. It started from the trading desk because we started, we dealt with the trading desk, but then we did a lot of algorithm trading, which was, quick pay. That was quick pace because, when you get positioned, when you do a trade for a trader, he has to write everything down. And there's only so much you can write. But when you just algorithm trading is involved, you're getting thousands of splits in minutes.
Yeah.
So basically, yeah. So then because of that, companies started, a lot of layoffs, and then eventually, I was let go. I was happy that I was, to be honest, to leave and everything. But I can do something else.
Yeah. So still in finance now, but now it's whole life insurance focused on the cash value, which I'll definitely ask you some questions about that. But before I do that, so when you worked at the big banks, right, the investment banks, did you did you see whole life insurance? Like, did you see something similar to what you see right now, whether it's on the individual or institutional side, when they had that in the balance sheet or there are discussions around that? Like, is that something that you saw firsthand? Because we always hear about it. But yeah, being on the battlefield or in the hands in the mud, call it, did you see that a lot? Yeah.
With the, we dealt with, the stocks, so we didn't really deal with the whole life,
Uh-huh.
but I was aware of, the company putting policies on individuals.
Your company.
When I was there, the
Yeah.
company would put a policy on me. And, if you work there for a certain amount of years, you get X amount of dollars, if you
Yeah.
left. And that's something that was, I was involved in. And also, you have executive that, you had the company put, individuals that made a lot of money for the company,
Yeah.
and they put life insurance on them to make sure, God forbid something was to happen to individuals, unforeseen circumstances, the company is covered to get another executive to, take the individual's place.
Yeah. Deferred comp plan, just funding it with whole life insurance. So they've got the key man insurance as well. That would, yeah. Yeah.
Then we had individuals that will come to the office because there were certain trades that we couldn't do because we are, obviously the, inside trading, we don't get involved in that. But we had individuals that came and they would sell us, whole life insurance. And then this is when I first learned about whole life insurance was in the 1990s.
Yeah.
And the way it was pitched to me, I wasn't really a big fan of it because, they will say, okay, you put X amount of dollars, but then they'll show you a break even point is year 18, 19, which didn't make any sense to me.
Yeah. Like, why to
I'm
put my
like,
money here? Yeah.
yeah, I'm so like, why would I put my money on this when, I can
Yeah.
just put my money in the stocks and everything? But, to be honest, it's a lot, I put money in stocks and everything, but then you seen what happened with the tech market. I lost a lot of money there. And, the markets go up and down. So you figure, I need to put my money somewhere that it can be safe, not just a bank. Because if you really think about the bank, you're getting less than 1% into your of interest in your savings, and but they charge you like 25-30% on your credit card, which makes no sense.
Yeah. No. Good business for them, to say the least. That's interesting. So your company, when you worked there, they took policies out on high level executives, also offered it to employees. That's similar to what you'll see corporations do and banks. You've got guaranteed issue policies, which is just a one-time purchase. They say, here's a lump sum of money. They give it to the insurance company. And then those high-level executive plans, that's typically they'll fund it for several years. And they offer, it's a deferred comp plan, kind of like a pension. If you stay with us so long, we're going to give you X amount of dollars. That's pretty cool, though, that you were in there with a big banking institution that's got access to everything, and you see them firsthand pumping money in cash value life insurance, which is interesting because you can use that, you can lean on that experience with what you do today, which is nice because it's exactly that. Cool. Cool. So the individual policies you were shown though, so when you worked at the investment bank, people would come in and say, here's somewhere you can put money. It was whole life insurance, but it had like a 15 to 20 year break even point, something like that, just to get your money back.
Yeah, it's like they wouldn't explain it. Then when it's like when you ask questions, it's
Yeah.
like you can tell they would get upset. So I'm like, wait a minute, just because I work here doesn't mean I'm just gonna throw you my money.
Yeah.
I have a family I have to take care of. And it's something like they gave you illustrations. I just went over them, and then you meet them again, but it just didn't. I just wasn't happy with the way it was designed. I'm like, you know what? It's not for me.
Yeah, and that's the most traditional type of whole life insurance sale or approach, which is here's a death benefit, it costs a premium, you've got lifelong insurance protection, but then eventually you've got this cash value build up, and here's all the benefits that come with it. When you look at whole life insurance, yeah, it's like 90% of policies sold are that type of product. And typically you'll see people look at it and say exactly what you said, like, why would I do this? It takes too long to get my money back. As safe as it is, like a negative return for 20 years isn't worth it. Yeah, our friend John, I won't say his last name, but you know who I'm talking about. I remember early on in my career, someone was trying to pitch him on a policy when I was like in my second year in the business. And it's like, why would I do this? I'll be dead by the time I get my money back. But I mean, he'll say that kind of stuff, but that's often the big objection with whole life insurance. So let me ask this then. So you know a lot more about whole life insurance because you've worked here for several years now. When you're speaking with individuals that talk to you, they have an interest in whole life insurance for the cash value benefit. Typically, what do you see them ask the most, or what always comes up in conversations? More so, maximize cash value, or I'm going to be able to use the policy for X, Y, and Z.
Yes, that's a good question because you have many, facets of questions that individuals ask, but the main thing is the maximum cash value.
Yeah,
To just back it up a little bit, when regarding the whole life, I wasn't a big fan of it.
yeah,
You and I knew each other. We knew each other for quite some time. So I know you gave me the books. Become your own bank. Just start
oh
reading up
yeah,
on it. I just started reading up on it. Started watching your video. I'm like, well, this lot makes a lot of sense. How his policies are designed, how they can be designed.
yeah,
And then, when I speak with clients today, they're focused on, okay, I want to maximize my cash value. And I tell them, yes, we can. That's the first thing. I let them know that, the client is first with IBC Global. We're going to try to lower your cost of insurance as much as possible, so for your cash value to build up. So we have individuals that say, yeah, I want that, but then also individuals that want, yes, I'm focused on the cash value, but due to unforeseen circumstances, if something happens, my family is protected.
yeah.
And that's one thing about the whole life that I learned is, it's safe, liquid, and tax-free if it's designed correctly. And to be honest, until I went over all your videos, I seen the transparency, and I was like, you know what, this is something that I'm interested in doing because you educate individuals, and you feel good when you talk to individuals about it because you're presenting something that's going to really help individuals.
Yeah, no, thanks for mentioning that. Yeah, that's been my mindset since day one. I mean, you can sell a product that really the industry does have a bad reputation in a lot of ways. I've heard it's a broken industry by people that are in business and finance, but not directly selling life insurance. So it's a nice outside perspective. But in many ways, it is broken. And what I mean when I say that is your case is perfect. You had heard of whole life insurance. You weren't interested based on what you had seen. You learned more about it and see the benefits of cash value. But now, being that you do it every day, to educate someone on how to maximize the cash value and then ultimately sell the policy too, minimizing the insurance expenses, to do that, you do really have to have the individual's interest in their best interest in mind. Because when you look at how the industry is just positioned, if you maximize someone's cash value, what will happen 10 out of 10 times is the profitability, the commission paid on the product, that goes down as well. So you do start to see exactly how the money works, but it all goes back to the institutions too. Those institutional purchases, the commission rate is minimized, but when it's on a massive amount of money, right, the agent and insurance companies, like, who cares? Like, look at the amount of dollars coming in. So you're really just duplicating what starts out at the top with institutions for individuals. Just individuals are typically much smaller dollar amounts than what you'll see on the institutional side of things.
Yeah. No,
I,
and because learning on the whole life, especially with IBC, I'm a big fan of whole life. If
yeah,
I was not, I would not get. I would just go back to be honest, I will go back to commuting to New York because I don't have a problem doing that. But
wow.
I do like helping individuals, and I don't. It's helping individuals. It's not just production. Just you're helping individuals.
Yeah. So in addition to seeing people always wanting to maximize cash value, which I agree, that's where everybody should start when you're interested in a policy for the cash value. Like loans and such are fun, but maximize it first. That way you're good. Do you see a lot of people and work with people on a regular basis that actively use their policies, whether it's for purchases, if it's something like something like a car, or if it's for real estate or other business opportunities? Hmm.
Yes, I deal with people that just want it for, buying things like, let's say, a car.
Yeah.
Individual just got a policy saying every 5, 6 years I switch cars, so I opened up a policy just for that. But then
Nice.
I also deal with a lot of real estate investors. I mean,
Yeah.
they call in and say, "This is what I want. I want flexibility of putting money in. I need to take that money out right away. What can you show me?" We give them different options. So we're not going to tell you focus on, okay, just on one company. We're going to give you different options and give them the pros and cons of, both, the companies and the benefits of how to use your policy, how to maximize it, regarding, especially with loans. You have a lot of individuals that they want to take out loans for their properties, but then they call me back. It's not like you're just sell a product and you're done. You're still continuously working with the clients. I'm getting constant calls from them. Hey, I want to pay back the loan. What is best to should I put money into my PUAs or should I pay back the loans? And I tell them, well, how much, are you looking to pull that money right back out for another loan? For another loan, they would probably say yes. Like, well, I would recommend paying your loan,
Yeah.
pay that down, and put money in your PUAs, and then you could start, take another loan out so you won't let it build up too much, but you have enough for your next flip of your home.
Yeah, yeah. That's typically what I say too, and I love that response because that is in the client's best interest. You're chipping away at the loan interest by attacking the loan, and when you look at dollars going into a policy, if I'm a consumer, not a licensed agent, I give the insurance company $1. If I put it toward a loan repayment, it goes toward the loan. I see the cash value restored, just like equity if I were paying down a loan with a bank. Call it a line of credit. Whereas if I put it into the PUA rider, the majority will show up in cash value right away. However, there is a load or fee that comes off the top. The insurance company also compensates or pays a commission to the agent. So if I'm looking for the immediate maximum return, often applying it toward the loan will work out in my best interest, especially if you're in the early years because you've got the cost to borrow. Yeah, where the loan interest, if that exceeds the gains on the policy in the early years, like that's important to bring that to people's attention because a lot of times it can be overlooked if we just don't have the numbers out in front of us.
Yeah. Mhm.
Yeah.
And there's
All
certain
right.
times when people want to use a loan that is not going to work, and I'm
Yeah.
going to let them know it's not going to work. It's not something that you will want to use that for that specific loans. So
Yeah.
I am transparent with what I have to tell them.
Which is appreciated. I mean, sometimes it is really helpful to hear that. I know when I'm dealing with a product or service I don't deal with every day, I don't know. I do appreciate it when someone tells me that and then explains the reason why.
Yeah, well, a lot of not a lot, but I speak to individuals. I let them know you can't use a policy as an ATM machine. It doesn't work
Yeah.
that way. You
Yeah.
need to you need to put money in there, try to hold on to it because you want to build it up, but don't you can't. It's not going to work if you're going to use as an ATM machine.
Yeah, no, not yet at least. I've heard one CEO at a large mutual insurance company wants that for his company, but that's a ways down the road in my opinion. Yeah. So here's a question. Have you ever worked with someone that was interested in a policy and they wanted to start a small one, or they even started a small one, and then shortly after they said, okay, I like this, and they ended up putting in a huge dollar amount, or they got another big policy?
Yes, I had an individual actually, who I spoke to him last year, and we were going over numbers, and
Hmm.
he was like, "Oh yeah, I want to get this another policy." This was his second policy, and he says, "I'll eventually I'll get another policy."
Yeah.
And then as we started going over numbers, he started to pay. He wanted to pay a certain number for a longer amount of years.
Okay.
So then when we went over the numbers, I mentioned to him, when he went to management, I even spoke with you about it. I'm like, well, why don't we shorter funding, but put more money into the policy?
Yeah.
And then once he's seen that, he's like, wait, this makes a lot more sense. This is going to be my final policy. And he just put a huge amount of money in there.
Yeah. Hyper funded up front. Like instead of Yeah. Instead of 50 grand for 20 years doing, which would be $1 million, doing 200 grand for 5 years or something like that.
Yeah, yeah.
Yeah. A
And
lot
once
of
he seen
times.
that, he was like, "Oh well, this looks good. This is what I wanted." He thank you so much. He was a really very appreciative that we're not just selling a product. We're actually taking our times with the client, showing him the in and outs of two companies, and
Yeah.
what you want to do, how much flexibility. And that's one thing you got to ask the clients. What is your flexibility? If you want, do you want to put money into a policy, and is that a problem putting it annually, or do you think you need flexibility? And then we can give them different options from there.
Yeah. That, in my opinion, is one of the top things to talk about. And a lot of times you mention the word flexibility with insurance, it's hard to connect the two. Because typically insurance, like I pay a premium, it is what it is, and if something bad happens, an insurance benefit is paid out.
Yeah.
Whereas with this, you've got the cash value component. So you can explain, yeah, you can set it up where you pay a small insurance premium and then just dump extra money into that paid up additions rider, which builds the cash value. And you can set that up to be as flexible as you'd like with some companies, where some companies don't. So you taking the time just to hit on those different aspects one at a time, like that's really important. And like you said, asking, never assuming someone understands that you can't do that because so many times we think they know and then we find out they don't after they started. It's like, no, 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 we don't want that to happen.
Yeah.
Yeah. All right. Final question. When you're working with a client, what, in your opinion, is the most important thing to do and draw on your, I'm asking this, drawing on your Wall Street experience where speed's very important.
Well, prior conversation here, you see me going a mile a minute. And that's
Yeah.
something that,
Yeah.
in New York, it was, I had six monitors in front of me looking at different things,
Yeah.
going, just going a mile a minute. But, with the whole life, you have to take your time.
Yeah.
One thing I noticed with this job is asking questions.
Yeah.
Yes, you wanna get through it as far as, oh, well, how much you want to put into a policy for how long, but you really need to ask the questions in order to really get to know the individual and see what are his options, or what he wants to actually do. You want to take your time in providing illustrations that can help the individual see the different products within the different companies, and help make the right choice, that they don't come back later on and say, oh man, I shouldn't have done that, I shouldn't have bought that product. So
Yeah.
we try to set up meetings. I know we book a meeting from a meeting. So we just want to
Yeah.
educate the individuals, be as transparent as possible, and show them how a policy will work and what's their best interest for the client.
Yeah, no, that's really good. I mean, asking the right questions, that can be hard sometimes, especially if you have someone that comes to you, they're interested, maybe they know the basics, okay, the cash value, their safety, liquidity, the tax benefits I like, but like, where do I start? Like, where do I go from here? Like, what should I be asking? That could be tough, right? And there's intro videos and such we have that we can encourage people to watch to start there. But in a case like that, a question that I've really that I really like and I've learned to ask a lot is, well, if you'd like, I can share what other people do and share the reasons why other people put money here. If you'd like, yeah, that'd be great. And then mention the three most typical cases we see. Well, a lot of times we'll see individuals put money into these products for the cash value, one, because it's a safe place to put money. I've even heard some express that they view it like a municipal bond alternative,
Hmm.
but safe place to position money. The second type of individual is someone looking at the cash value as a personal line of credit, right? That I can use it for real estate, for my business, but I like the idea that I've got this money compounding, I can borrow against it, and I still get compounding on everything.
Yeah.
And then third is someone that's typically looking at it from a long-term play, taking income. Once they build the safe money up, now I can take income on a tax-free basis. Do any of those jump out, or any of those that you really like, or is it a case like where you're like, hey, I like all three? And then see what they say, and typically they talk about one a bit more.
Oh, they like all
Yeah,
everything
I
we
know.
bring it. They like all of it,
Yeah,
because
yeah,
when people call us here, they want all of it, and that's we are transparent. We show them how they can use their money, how they can, how it would benefit them and their families. But it's always like you mentioned, asking questions, let
Yeah.
me know what do you want the policy for now? What you intended to use it for? So when you get all those answers to those questions, then you can make us, sound decision. These are the, products that I think we will work best for you. When
Yeah.
working in New York is not, you're not asking questions. They're just calling you on the phone. You're just writing down, the tickets on the stock tickets and just go to the next one. You just keep going,
Wow.
going, going. Here you have to take your time and really know the client, get to know what they want, and design policies to you know maximize their cash value.
Different. Yeah. Completely different. Yeah. More so order taking before because people know what they want, right? Especially the institutions.
Yeah, and it's this, with the whole, like, it's not slow pace because we're very busy. We
Yeah.
continuously busy, but you have to get to set the time to speak with your client. That's
Correct.
one thing
Go.
that's one thing we see, with our
Yeah.
company. We do that.
Check the boxes. Don't skip steps, right? Very important. Cool.
Correct.
Well, this has been fantastic. Anything else you wanted to add before we wrap up today?
No, no, it's a pleasure always speaking to you, Steve. I like working for the company. I like the transparency, the videos you put out there, because it educates a lot of individuals. You have individuals that, since I work with the ILS Training Academy, the
Yeah.
agents, we get calls from agents every single day. They want to work with IBC. And I
Yeah.
know you developed this platform, the ILS Training Academy, for outside agents,
Yeah.
and to be educated of, the IBC, and it's a pleasure, truly a pleasure working here.
Yeah, no, the feeling is 100% mutual. Yeah, no, and I'm glad you brought that up as far as your role, where you've got really a dual role here at the company, where on the ILS Agent Academy, you're working with licensed agents on a regular basis, in addition to your full-time role, which is working with individuals on policies. But yeah, that's a lot to take in. But no, I appreciate you mentioning that. Thank you.
I remember when I first started working here,
You
my
started.
first task, it was like 3 years ago. You said, okay, here's the videos. Look at all the videos. I had to
Yeah,
learn how, with the videos, like, wow. And that's what I do today as well. When this,
yeah, I know.
I'm only here 3 years. It's still, you're still learning. There's a lot of information you learn. I look at the videos, look at the agent videos, and then I look at the, video outside videos if I have any questions. There's a lot of questions we get asked from clients, which is nice that you have videos out there for them, and
Yeah. Mhm.
it's
Yeah.
good to, I look at those videos first before I even send them out, because I need to be educated as well on those videos.
Yeah, the questions from individuals that reach out to us or existing clients, those are always the best questions. I always write those down because when someone that you're speaking with asks, "What am I not asking?" You can literally draw on those questions. Here's a question that comes up very, very frequently by others, and like, "Oh yeah, that's a good question. I didn't think of that." Well, here's typically the answer to it. And then you can really get on their side of the table, and they don't feel like you're trying to sell them a policy, which is important. Like that's really our what I'm going for, what we're all going for with the company, because it's not about just selling products. Like no, educate if they want to move forward, help them, and if you're educating them and can sit on their side of the table, we all trust each other more. But
Yeah.
that's the name of the game. Yeah. Cool. Well, thank you so much for your time. I do appreciate it. If anyone would like to get in touch with Ed, I've got his email address right below. Feel free to reach out anytime. And thank you so much for watching.